works.
Hello everyone and welcome to episode 13 of Let's Play Wall Street Raider. I'm RakeM, your host, and today we're finally going to be turning the ticker back on and actually getting some decent game time to elapse in our simulation. At the end of the last episode, we went through our spreadsheet and cleaned up some of the stocks that we hadn't looked at that we acquired during episode 11. And then we went through the corporations list to look at the stocks that seemed to be ailing in their earnings, to do whatever we could to help them with their situation. And then we started to go through the streaming quotes, stock quotes list to make sure that all of our most expensive, most valuable investments are well taken care of. We started with the bank and we ended the last episode buying all the remaining loans that were outstanding in the entire market. So SunTrust now owns all the loans, and we're going to continue down the list. So without further ado, let's get started. All right, so the bank owns all the business loans now in the game. Came to $5.75 trillion, and it looks like the autopilot bought some additional consumer loans because we had so much cash. Of course, I'm the CEO of the bank now, so it won't do that anymore, but between the time we turned it on and the time I made myself CEO, it must have done that. But we have enough excess cash that we can start bringing these up now, so let's make both of these, let's make them 900,000 each. Okay. And we've got an error when I try to bring up the research report. So I guess we'll just have to look at those projected earnings on here. $1.35. So all right. Well, that's great. All right, so we're getting low on corn. Our target is 3, and it looks like it got all the way down there, and we missed it. And our target here is what? Wheat, $10. So we got a ways to go. Silver's up. Spots crude is about flat. Gold is up above 1,000 again. All right, let's look at Hartford. Got a lot of a lot of stock. But he's got a bank loan now. I think we might want to give him some cash. Not a lot, just like enough to cover all of these. So call it $25 billion. Okay. And we'll have him pay off his loan. I don't like for my parent companies to carry any debt. Alright, so next is, oh wait, let's look at his management too. Reasonably competent. We're at 5%, let's make it 6. Fund advisor fee. HIG is currently the fund manager for Energy Sector Fund. The annual management fee at present is 0.3% of fund assets. I guess I need to do some reading on that because I'm not sure exactly how that works. I'll leave it alone for right now. It's only making $18 million off of that contract. And we've had $33 trillion in losses. I guess that's from Kraft. Who is that from? Is it Kraft? I don't know. I don't know what it's from. It's got subprime mortgages though. It's a pretty small percentage of our portfolio, so I guess I'll leave it. These earnings next quarter are supposed to be way up, so I guess we're done here. But I do need to look into that fund management thing. Alright, Swiss Reinsurance. We'll come back to Arab in just a moment. Alright, so we got plenty of cash here. Kraft, look at that, his dividend is huge. $0.12 a share, and his share price is $2.49. Alright, let's do a reverse split first of all. Alright, Swiss Reinsurance. I guess we'll just leave it. It's not hurting anything. Swiss Reinsurance is making money instead of losing it now. We're very incompetent though. We're at 5%. Let's make it 6%. 3Com's earnings went down again. From 31 down to 13. Curious to see what he's supposed to make next quarter. Still going down. Very incompetent. 16%. We upped him, I think, just a minute ago, right? So we could change his management now, but I'm just going to wait another quarter. Because it hasn't been at 16% for very long. Alright, we've got some extra cash on him, so I think what we're going to do is buy some bonds. So let's go to the database and find some bonds to invest in. Alright, Corning went broke. He's in network and telecom, so we can have, not Verizon, 3Com. 3Com buy him up. Alright, so here's 3Com and here's Corning. Yeah, the computers, the autopilot's putting dividends on everything. Alright, so let's buy Corning. I don't think... Oh, that's T-Com. Let's go to Corning. How much is he? $1.5 billion. Yeah, we can afford that. Okay, so buy. And liquidate. All right, so looks like this investment's paying off. We're almost positive. So another quarter we should be okay. All right, so let's look at Arab. All right, 30%. We're growing 4%, which is well below the market, but these returns are kind of low, so that's fine for right now. His credit rating is in great shape. But his management, oh, it's very capable. So why aren't we earning as much as these other guys then? Because they're not spending anything on R&D? All right, let's lower our R&D to 6 and increase our growth to 11. We could actually grow more than that, but I'm going to leave it there for now. We may increase it next quarter. All right, Time Warner Cable. I just want to see what his. Okay, it's headed downward still. Again, he gave us a dividend, -1 and 8, which I think is what we set it at. Very incompetent's the problem, and too much debt. But I'm not going to give him any cash. I'm just going to pay down with what cash he has. All right, so now let's look at America Online. Reasonably competent. Could buy back some more bonds. Okay. And our income's going to be up. All right, let's look at Glasgow. Ooh. These are a lot of negatives. Wow, that stock price is high. What is our target for him? $145.73. Why is that so high? Let's look and see what we spent on him. Alright, something's off in my calculation over here, because that's 6 times what we spent on him. So it's time to sell him and reinvest in the industry in another company. Though there aren't any that are reasonably priced. And actually, I wouldn't want to reinvest in this industry right now anyway. It's all too negative. Alright, let's just sell it off. And now he's got a ton of cash. So We'll delete him. When we get done going through our list of big companies, we'll look at these three industries again and see if there isn't something that we can buy. Alright, so next up, Time Warner we already looked at. Microsoft. Wow, look at that stock price. It's not quite 4 times. 4 times would be 600 billion. He's already at almost 9 times his net worth price. Income's still going up though, projected for 260 right now. And there's no other companies to buy. So we're going to hang on to him for another quarter and see what happens. That's just a huge growth rate. It's deteriorating, but we're very capable, so I mean, I don't know. Let's wait and see. I'm not sure. I'm not sure. Let's just wait and see. Alright, -2 and 10%. Grossly incompetent. I think we need to change the management on this one. Although our earnings are going up. Scheduled to make $3 next quarter. Now they're coming down. He had a big quarter last quarter. Alright, let's change the management on this one. Alright, I'm going to leave the rest alone. Okay, Siemens. Reasonably competent. I think we're going to up the R&D. Let's up the R&D on him. Make it 5%. You know, I realize that he's already negative, but these guys are earning money underneath him. He's even paying a dividend. All right, next. This all looks good. Let's see. -24. So we're still heading up. You know, we're negative, but we're heading up. So let's pay the debt down. That'll help. It looks like our interest rate's going down now, as is gold and silver. Corn's going up. Alright, Kraft we don't need to look at. Nippon. Well, we don't need to grow negative. Let's grow at 6%. Yep. Okay. Luke we don't need to bother with. Costco. Alright, we're growing at a negative, and it doesn't look like we need to. But I don't want to get outrageous. I want this to go up some more. So I just don't want to grow higher than this 4%. So let's make it 3%. And we'll raise our R&D to 7. And we'll pay our excess cash. Well, let's buy the bonds back because they're at 9.5. Okay. And now our interest rate's going up again. Alright, it's December 31st, and it's only been 2 months since we went through all this. Now I'm going to turn on the ticker, and we will just deal with these things as they come up, the earnings reports, and we'll look at each company as they declare their earnings. And whenever there's a big gap in the action, we will look at some of these. But primarily we're going to be keeping an eye on these numbers, especially the interest rate. These are all kind of in middle ground, these commodities. Alright, so let's start that. Alright, so let's turn on the ticker. And while that's running, I want to take a look at these 3 industries and see if there's anything to be had in them. So household and personal products first. Okay. And we have Warner Lambert now, so I guess we need to put that over here. Alright, and looks like we're going to pick up Gillette. And I don't remember what this is. Whenever I see that one, I think FootJoy. But that's not who it is. It's Fort James. Okay, nothing else to see here, I guess. Alright, so who else? Pharmaceuticals we just left. And it's all getting even worse negative. So let's stay out of this one for now. Restaurants. Alright, let's take a look at Sao Paulo. His earnings are up, well no, from $3.42 down to $1.07. That's a pretty big decline. Let's take a look at him. Is it because we upped our R&D? scheduled to make 88 cents. So that's on par. I mean, we're going to make what, $3.32. That's pretty close. Very incompetent, and it's deteriorating. Got no loan. We're only 2% of the industry. All right, let's up our R&D to 16. And if that has any beneficial effect whatsoever, we'll beat our earnings for last year. We'll just turn him around. We'll just turn Sao Paulo around. He doesn't need anything else. I mean, I would get rid of this dividend, but the autopilot will go ahead and put it back in, so I'm just going to leave it. Alright, so restaurants. Alright, so Subway we could get. And Luby's. Let's see if Olive Garden is fully owned or not. Yep, he is. Well, shoot. Alright, so Subway, Luby's, that'd be 4.5%. Just can't get a big enough market share to have an impact. I think we'll just wait a little while. We'll just wait a little while. Alright, what was the other one? Beverage. Apparently there's some delay. Oh. We just gave 1,000 million to Lukoil. Why would we do that? I'm liking this autopilot less and less with every second that goes by. He's got 66 billion. Why give him an extra billion? I mean, the only reason is because his net worth is so low. Let's get rid of that reserve. That'll help him out. That'll put this up here. Okay. Alright, Arabian did well. Got a nice return despite how high we're growing. And I think we can grow some more. These guys, this guy has credit to his name, but the rest of these down don't. This guy may go bankrupt, Conoco. Phillips may go bankrupt. So that's, well, they're all less than 1%, so that's not going to have an impact. All right, let's up our growth rate on him to, on Arab, to 24%. All right, we've got plenty of cash and no loan. So let's do that. And looks like the autopilot changed our settings here too. But we're going to wait until May before we start messing with the autopilot. We're going to let it run for a good 6 months. We may even wait for June 1st. Make sure it gets a full 6 months in. Alright, so what were we looking at? Beverage. Alright, Alcan Aluminum has gone bankrupt. They're in base metals and mining. Here we are. There's some bargains to be had in here. He's very capable. He just got too much debt. Alright, so we got plenty of room to invest more of the bank's money in stocks. So let's go ahead and contribute some money to Alcan Aluminum and have him buy up whatever stocks he can in that industry. So let's take a look and see. We have 4.4%. And the industry is downsizing. So if we bought Alcoa, I think this is, we can just leave him at -10 and make a good chunk off him. He's not that high priced. Let's take a look at him. 26 billion, so we'd end up spending 30. Plus another 10 billion for debt. Alright, so let's have the bank buy him. Alright, Nippon did well, so we're not going to bother going to that one. Let's go to SDI and buy Alcoa. Alright, and now let's give him some cash. And I'm going to give him 12 to cover his debt plus what Alcan Aluminum's debt is. Alright, and now let's contribute Alcan Aluminum to him. Now we'll liquidate Alcan and then take care of the debt and reset the management parameters. So we'll buy back these bonds. And now pay off the debt. Alright. It's 3.5 to 1, which is fine. We'll leave the growth rate at -10. We'll increase his R&D to 8, and we'll eliminate the dividend. And we'll probably grow at -10 for the foreseeable future. Alright, so let's take care of that. Dividend 0. And R&D 8. Okay. So that'll be fine for now, and probably for a long time, provided the autopilot doesn't change it. Alright, so who did we give that to? That's under the bank, right? Yeah. So we'll need to add that up here. But I think I'll do that when I'm not in the middle of recording. We'll pause it at some point, or before the end of the episode. I'll pause it and update all this, and we'll go over it at the end of the episode. Alright, so Lytton had a good report. Up from last year, but down from last quarter. And I bet these right here are the reason. That's a lot of growth in an industry that has a negative demand. So I think we're going to freeze them. Alright, let me get Paintbrush open. Alright, let's do some freeze unfreeze. Alright, so starting with Lockheed Martin. Aeropostale, or whatever it's called, right here. Alright, British Aerospace. Oh, it's not British Aerospace. What is it? Boeing, maybe? Yep, Boeing. Alright, GE Aerospace. UTX, whatever that is. United Technologies. Okay, and that's Dassault. I think that's it, right? Yep. Okay. Alright, AirTran is finally making money after having a negative year. Paid down some of its credit. Let's go take a look at him. We're growing negative. And we earned 25 cents, and we're supposed to go up to 62, so we're heading the right direction. Just need to improve our management some more. But we were already spending 8%, which is more than anyone else, so it should be okay. So I won't increase that unless we drop down into very incompetent. Alright. Alright, looks like the autopilot has bought our brewery some extra assets. So the autopilot gave him a dividend, which I don't like. But it looks like everything else is the same, so let's take a look at him. Still got plenty of cash. Of course, we're growing negative now, and we don't need to. I think we were growing positive before, now that I think about it. It's growing at -6. Yeah, we don't need to do that. His management is very incompetent. Hormel has some futures. Okay, we need to look at that here in a second. I think we just want to set our growth rate to 1%. And give this 10% R&D time, some more time to work. I'd buy Miller if he wasn't already owned. Alright, let's look at Hormel. Alright, he bought futures at 405. And it's dropping. What are mine doing? We bought corn at 10.09, so we need to sell it short when it hits $3, right? So we don't need to do anything on those right now. And now Swiss Reinsurance is donating capital to Dow. Let's see if we can figure out why that is. There's no need to do that. Why would it do that? He's making money of his own. He doesn't need additional funds. I don't get what this autopilot's doing, but I don't like it, I can tell you that. I'm going to have Kraft eliminate its hidden reserve, just like we did with Lukoil. At 11 and a quarter, keep going. Alright, Lenovo lost a little bit of money, but it was more than last quarter, which is a bad sign. But he's going to be positive next quarter. Let's just make sure we don't need to freeze anybody there. Nope, this all looks good. No dividend, finally one without a dividend. Let's just put his extra cash toward his debt. Alright, Microsoft is up just a tad. And it looks like it bought back some bonds. Okay. Still growing at a negative 8%, it's fine. Yep, all this looks good. Looks like there's some more we could add to it. How much of Compaq is owned? 100%? Alright. So is that one. Adaptec we could buy. ATI Technology. Sun Microsystems. And Toshiba Computers. We could add all of those to Lenovo. Let's do that. Let's add all these others that are reasonably priced, starting with Toshiba. Time Warner's earnings are up. That's good. Hanson Trust has a bunch of stock. What stocks does he own? Unilever, which is in household and personal products. We're looking to expand our presence in that one. Here's Unilever. Almost 10%. And Union Camp paper products. here. These returns aren't so great, but we don't have any stocks in this industry. I wonder where paper products is on our list. I don't even see it. Oh, here it is. Went right by it. So since we can't get a share in these three, we could pick up paper products as a substitute. See how many others there are. We could get this guy. Not sure who he is. West Vaco maybe? I don't know. Yep. He's reasonably priced but owned. This is Stone Container, I think. Alright, let's add this up. So UCC is 5.6. West Vaco is 3.2, so that's 8.8. And I guess that's it. So 8.8%. Alright, Kraft continues to lose money, but we were expecting that. Alright, so we'd have to buy the rest of the public shares of UCC. And I think the plan was to put these, all three of these, under Hartford, if I remember correctly. So Hartford is where? Row 34, right here. So yeah, all three of those, well, these three. So household would go under Swiss Reinsurance. All right, let's look at the rest of the industry. So Hansen, Sun Microsystems, ATI Technology, and Adaptec. All right, let's go ahead and buy all those, and then we'll deal with Hansen's subsidiaries when we get done. All right, so Warner Brothers is up. That's good. All right, let's contribute the stocks we have now to Lenovo. Who is UNVIA? Oh, Universal Studios. Okay. We'll deal with that in a second. Let's get done with what we're doing here with the computer industry. All right, now we'll liquidate these two. So we want like 20,000, and we've got enough to buy back our bonds and then pay a little toward our debt. So let's do that. All right, that's decent. That's 4-1. All right, now News Corporation. Let's decide if we want to keep him or sell him. He's listed as a strong sell. I don't like that at all. Don't like that they're contributing money without my looking at it. Okay, so we own Time Warner in publishing, and News Corporation's right here, and he's rated to sell. I don't remember having us grow this guy. 14%? I don't remember doing that high. What did we have him at? Okay, so Time Warner, TWX right here. We had him at -1 and 8%. And he's at 8% and 14%. I don't like that at all. I mean, it's helping our stock price, sure, but I don't know, maybe the game's smarter than me. Maybe the simulation is smarter than me. Look at that. How much, what's the tax basis on him? 139. So our target price, according to this, is 217. Let's calculate it the old-fashioned way and see if we get the same number. 139, 428 times 5. Okay, so maybe it is going to be the same. 10 billion shares. $69. See, I don't think I have 10 billion shares as the number of shares. See, I've got 3,000. That's where our calculation is off. It's done some splits. See, I've got 69.71. And over here it's got, where is it? 65.21. 130, 429. See, and that's not what it was over here. $139, 428. So it must have given him money too. I don't know, there's just too much going on with this autopilot that I don't get to see. It's only February 15th. If I could turn it off, like if I could turn off the dividends, I would probably still use it. I don't like dividends though, because it takes away net worth from your companies that you're trying to grow. You end up paying higher taxes on the amount that's being issued as a dividend. I don't know. We're going to go ahead and let it keep running until May. But we're coming up on an hour now. And so what I'm going to do is I'm going to ignore companies for just a minute and see if this gets up to 12%. And if it does, I'm going to finish the episode by doing some new interest rate swaps. So, well, crud. It just dropped. Well, we got Vodafone like we thought we would. Okay. Here we are. Verizon. Alright, let's have Verizon buy Vodafone. Alright, there's the first of our lawsuits Hitachi just filed. And this is Sears. We own Sears. And we got a little overzealous with our investment in that industry. He's growing negative, but he's above 50%. So we're going to probably have to pay for our mistake there. Let's see how much the suit's for. For $67 billion. I think that's more than we're worth. Well, it's close. So we'll probably settle it for 20%. Got a huge amount of cash. We must have bought something from him. And if one of them is going to sue, they're probably all going to sue, so who owns him? Sears. Here it is. Well, we could double our money by selling it right now. Could we re-enter the industry? Yeah, we could. We could buy these two. And Neiman Marcus. So that's 38. Call it 40. Let's do that. I mean, we're not going to make a lot of money, but he's going to lose a lot of money here in just a minute. So whether he wins or loses, he's going to lose money. All right, so JCPenney and Carter Hawley Hale. Okay, and Carter Hawley Hale. We still have to deal with Unilever and United Camp. I forget what the symbol is for Neiman Marcus. All right, let's consolidate those three. Oops. All right, now before we liquidate them, let's make sure they don't have antitrust suits pending. And if they don't, we need to start one. And I don't see one here. Okay, so let's do an antitrust suit. Sears Holding. And and we'll do the max amount. And our settlement's going to be 3 times the lawyer's fees, so $14,000. Okay. Bond issue, but no antitrust. So let's do an antitrust. Okay, 2282, so we'll make it 7,000 on this one. Okay, and he's not suing either, so we'll do that as well. And we'll make this one 500 million. Okay. And I think we need to have them all grow at -10. Eliminate dividends, of course, and R&D of 8%. That's going to be tough on him. We're going to have to give him some money. But these two, it shouldn't be a problem. So we'll give JCPenney some money for him to give to these two. So let's see how much they need. All right, so him we want to get down to 8 billion on debt, or not 8 billion, 6 billion. So we'll need to give him 5.5. All right, and Neiman Marcus needs. All right, FEMSA bottling we just got. So Neiman Marcus. We want to take him down to 600 million in debt, and he needs 550. So $6,100 million is what we need to give JCPenney. All right. Do we have that? What do you know? We do. All right. Capital contribution. JCPenney. Oop, too many zeros. Okay, JCPenney, management. Dividend 0. Growth rate -10. R&D 8. Alright, now contribute to Carter 5,500. And contribute to Neiman Marcus 600. Okay. All right, now I'm just going to put it all towards the loan because we're getting no discount on the bonds, and the interest rate on those bonds is less than what we're paying to the bank. So we'll just repay the loan. Okay, now dividend 0. R&D 8. Growth rate -10. Okay. Okay, that's an improvement. We're still losing money, but semiconductors was in terrible shape, and we're trying to reform the whole industry, so we're going negative and all that. OMC. I don't know who OMC is. Let's find out. Oh, well, this came up and it prevented the earnings report from coming with it, so we'll check it in a second. Alright, so here, same deal. We just want to put it all towards the loan and then change the management settings. Alright, so 0. 8, -10. And basically why I have these growing negative is number one, because the returns are low. But number two, because I want to keep him as high a percentage of the market as I can until the antitrust suit is resolved. Alright, so, and he's actually positive now, which is good. Alright, let's go back over to Hanson Trust and deal with those subsidiaries. Or, excuse me, Lenovo. And then we'll deal with the bankruptcies in just a second when we get done here. Alright, so News Corporation. Now he's rated to hold. His dividend is only 13% or 0.13%. So there's no reason to hold on to him for that reason. His stock price is on the way down. Well, I guess it was going up and now it's going down again. Let's look at the industry. See, I don't like that he's growing at 8%. Let's change that. He's already got a bunch of stock. How much is 9% of... I mean, it's only $1 billion. Let's just get rid of it. Let's just get rid of it. We don't need any more stock in that industry. We've already got over 40% of the industry. Alright, Goldman Sachs finally positive now. Alright, so the next one is Union Camp. Alright, well the only other one is West Vaco. Alright, let's have Hartford buy West Vaco. And buy Union Camp. And I'm just going to offer 30% to get it over with. Okay. And we'll contribute West Vaco to Union Camp. Alright, now let's liquidate West Vaco. Alright, so we need to get this down to like 3,500. And again, we're just going to pay off the loan. Alright, our management's very capable, and the industry is improving. Alright, we've taken over Seagate now. One thing at a time. Alright, so eliminate the dividend. We can grow. We don't need to grow -7. We'll just make it 1%. And R&D actually looks okay because we're already very capable. So 0 and 1%. Alright, earnings are projected to go up. Hit situations 3-1. Alright, so let's go back to Lenovo. We've got one more to deal with there. Unilever. Alright, so Warner Lambert, which I think is owned by the bank, and Unilever. His stock is pretty high, pretty high. Let's see if he's going up or down. Alright, so he's probably going up. I don't know why he's ready to sell. His earnings are going up. He's very capable. The industry is improving. And his earnings are going up. So that, whoever the analyst is that says to sell, they're full of it. Alright, he got all the way up to 169. And he's falling a little bit. Hasn't fallen a lot. So the question is, do we want to... You know what we could do? We don't have to buy his stock. We could just siphon off the assets. Alright, I'm going to think about this for a second. Let me pause and I'll come right back. Alright, so here's our options. We can sell it as it is, but the problem with that is that the tax cost basis for Lenovo is $15 billion, and his share is only worth 16, so he wouldn't really make a profit off that transaction. The problem is that if we siphon off these assets, pay off the loan, and liquidate, we would only get the $34 per share rate, which is what? 1/4 of the share price. So he's going to take a loss of about $12 billion on that transaction. So the question is whether Warner Lambert will make us more than $12 billion by taking the assets over. All right, so that would give us $26 billion. And our investment in this right now is $5 billion. So $25 billion, call it $26 billion, is what we would end up investing in this company, and then we could just grow it organically. 26 billion times 5, that's 130 billion. So we stand to make a whole lot more by just rolling it into here. So that's what I'm going to do. I'm going to have the bank give Warner Lambert 20 billion and have Warner Lambert buy the assets from whatever that other company was. Can't even think anymore. Unilever. Yeah, Unilever. And then we'll just liquidate Unilever. Okay, so let's do that. Okay, looks like I can buy assets from Gillette too. So let's do that as well. Okay. All right, so we have a loan of $4,800, 5-to-1, which is fine. It's not perfect, but it's fine. We now have a 13% market share, and our R&D is fine, but our growth rate we want to increase, I think. Management's competent, so let's up our growth rate to 5%. All right, now let's go to Unilever. He's got no assets, and he's not wholly owned, so we could sell him, but that would leave him with, $22 billion cash. He could wreak havoc somewhere else. Holy cow, look at corn. Wow. Okay, well anyway, let's deal with this. We could have him buy $22 billion in assets somewhere so that he's out of our way. We don't have anything in oil service and drilling, do we? Nope. Alright, so let's have him buy assets there. And let's make it $16 billion. And let's see what we need to make his management. 0, 20, and he's very incompetent, so I guess 11. Okay. And now that all these are now in the 20s instead of the 30s or 40s, we can go ahead and sell him at that nice high price. These guys are tripping all over themselves to expand this market. Look at that, he went up. Okay. Now the question is, what do we want Lenovo to do? He's got plenty of money. We haven't bought these other ones yet. So we can buy Sun, Acer. No, Acer we can't. He's controlled. ATI. Adaptec. So let's do that. Okay, who else? ATI, right? Okay. Adapt Tech. We could get GAC too, but he's so small. Alright, well, our earnings are finally going to go up. Reasonably competent. So I guess all we need to do is just pay our loan down. I don't think we need to grow negative anymore. Let's just make it 1%. That's what the market's growing at. And repay our loan. I guess we'll just go ahead and get rid of these two. We can buy them back at 100%, that's fine. Okay, we're going to have to stop somewhere, and unfortunately we're not going to make it to May. We've got a whole bunch of bankruptcies we got to deal with when we come back. So we're going to end the part here. Our value went all the way up into the high 50s, and now we're back down to almost 49 billion or trillion. But that'll even out. Looks like hopefully we're going to get to do some more interest rate swaps. We'll see. To offset what we're losing on our corn. We sold corn at 10. It's all the way back up to 9. None of the rest of these is really going anywhere. Spot wheat's been climbing, but we've got to get it up to 9. So I guess it's not that far. Alright, but crude's been holding out in the 120s. Spot gold is going down. We'll pick this up at in the next episode. And appreciate you watching. Please like and share. And until next time, have a good one.